Gold up $25 today, $3,857 an ounce. $3,857 an ounce. I didn't think it would go up this quick when Trump first got elected. But the dollar's going to go down. Inflation's going to go higher. Interest rates will fall. The deeper interest rates fall, the higher gold prices go. Plus the geopolitical and socioeconomic problems going on all across the globe.
In today's news recap, gold is forecast to rise 6% by the middle of 2026. The price of gold is forecast by Goldman Sachs Research to rise 6% through the middle of 2026 as of September 24th, underpinned by fresh demand from key groups of buyers who have contributed to a series of record highs for the yellow metal. The precious metal has risen more than 40% in 2025 and is on pace for its third straight year of double digits gains. The gold price is predicted to rise to $4,000 per troy ounce by the middle of next year, up from $3,772 on September 24th. Goldman Sachs research analyst Lina Thomas writes in the team's report. Their gold price forecast is driven by strong structural demand from central banks and easing from the U.S. Federal Reserve, which supports ETF demand for gold. Buyers of gold fall into two broad groups, according to Goldman Sachs Research. Conviction buyers tend to purchase the yellow metal consistently, regardless of the price, and based on their view on the economy or to hedge risk. These include central banks, exchange-traded funds, and speculators. Their thesis-driven flows set the price direction. As a rule of thumb, every 100 tons of net purchases by these conviction holders corresponds to a 1.7% rise in the gold price. By contrast, opportunistic buyers such as households in emerging markets step in when they believe the price is right. They may provide a floor under prices on the way down and resistance on the way up. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
Markets went up today after investors shook off the concerns about the government closing down. And September is usually a bad month, but it wasn't a bad month this time. We thought it would be worse, but it wasn't. Kept being artificially propped up by the AI team and others. So what happened? They say that markets hit record high, investors shake off shutdown. But then you read the Financial Times. Today's, after gold prices spiked, what, $71 yesterday? They said that gold surges past $3,800 an ounce amid shutdown fears. Now, wait a minute. Gold went up because of shutdown fears, but they're not fearing it on Wall Street. So who's bullshit? And here's the deal. Gold prices since last week have gone up almost $175 an ounce. That's a lot of money. Go to today's Wall Street Journal. Nothing. Zero. Nada. Yeah. Go to the business headlines. In the business and finance section. Electronic Arts is biggest LBO ever. Oh, that's with the Trump family, that one? Oh, yeah. What bullshit this is. Jared Kushner making all this fucking money. So here it is. Electronic Arts goes private for $55 billion in record-shattering leverage. Video game maker Electronic Arts is taken private by a Saudi-backed consortium led by Jared Kushner. and Silver Lake. They could do it now, but they're not doing it. You know why? Trump's business expands in booming Gulf real estate with $1 billion Red Sea deal. Well, this is from Financial Times also today. The project, the Trump Organization's second planned tower in Jeddah, will include offices, high-end apartments, and townhouses. On and on and on. On and on. So get back to work. You're a nobody.
JPMorgan Private Bank. Gold is expected to continue reaching new highs with a mid-2026 price outlook of $4,050 to $4,150 per ounce. According to Jitong Finance APP, Chen Weihang, global investment strategist at JPMorgan Private Bank, stated that the outlook for gold prices by mid-2026 is $4,050 to $4,150. It is expected that gold will continue to reach new highs in the future. Chen Weihang noted that although Federal Reserve Chair Jerome Powell's remarks did not provide a clear timetable for future interest rate cuts, the bank still anticipates that the Fed will continue to cut rates if the U.S. economic conditions weaken further. Gold typically performs better in a low interest rate environment because lower yields reduce the opportunity cost of holding non-interest-bearing metals. With gold's recent rise, investors may consider gaining better entry points through structured products. Previously, Federal Reserve Chair Jerome Powell stated that the current policy stance is moderately tight, allowing the Fed flexibility to respond to economic needs. However, Powell also pointed out that potential deterioration in inflation and employment could bring two-way risks, and there is no risk-free path for the interest rate outlook. The remarks of other Fed officials were not entirely consistent with Powell's. Goolsbee of Chicago believes that although the neutral interest rate should be lower than current levels, the Fed should remain cautious going forward. Bowman, on the other hand, took a more dovish stance, warning that the Fed should act decisively to avoid falling behind the economic curve. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
You're a nobody. So going back to the markets are up. Brent is down, Brent crude, because OPEC needs more money, because supply is down, so they're going to pump more oil out. So you're looking at Brent crude hanging at $67 a barrel. And gold up $25 today, $3,857 an ounce. $3,857 an ounce. I didn't think it would go up this quick when Trump first got elected. But the dollar's going to go down. Inflation's going to go higher. Interest rates will fall. The deeper interest rates fall, the higher gold prices go. Plus the geopolitical and socioeconomic problems going on all across the globe. Again, not one article in today's Wall Street Journal about gold prices going up that I saw. If we're wrong, let us know. But here are the headline stories in the business section. Electronics Arts is biggest LBO ever. Auto parts supplier First Brand files for bankruptcy. Jarvis is sentenced to 7 years for fraud. Bad Bunny to headline Super Bowl. What the fuck do I care? OpenIA lets users buy via ChatGPT. Private jet maker. On and on. Carnival Post, Sile under pressure. Nothing in the major stories about the spiking gold prices. They don't want people to know how bad things are. That's why they're not doing it. And Bitcoin's at the $114,000 an ounce. Again, it's gone up was down to what, $109,000. Again, we're bullish on it because the Trump family's in it. And that's what you got, and that's what you call it. Again, great articles in this week's Trends Journal by Ah,
What do you think of Celente's take? Will gold continue to rise in the fourth quarter of 2025 and beyond? Are we approaching a major top in the global markets? Post in the comment section down below your honest opinion. Subscribe if you have not yet done so. And check this video right here because it's a perfect fit for you, and I'll see you on the other side. Thanks for watching.